minor guidelines for tonight, and then we'll get started. So we will be speaking about the agenda items only to keep the meeting flowing properly. We will control the flow of the meeting by recognizing unit owners who ask to speak. We will start from the back, moving forward. So when it is time for the floor for unit owners to have the floor, we are going to start. It's just logistically just much easier to start from the back and come forward. All unit owners have the floor to speak once before allowing anyone to speak a second time. This is a large group, so we want to make sure everybody has the opportunity to speak. If the discussions get off track, again, this is about the 2024 proposed budget, I will intervene to get the group back on track so that we can continue with the agenda. We insist courtesy and respect shown to your fellow unit owners that are speaking, and we want to provide each speaker with our undivided attention. Please keep in mind that unit owners have the right to assemble peacefully when conducting association business. All right, at this time, I'd like to introduce guests that are at the table that are part of our meeting this evening. I want to introduce Carol Eskew. Many of you know Carol. She is the partner and senior vice president with Judah Eskew and Associates, representing our accounting firm. She's here collecting the proxies. She's also here to discuss the budget, and we can go through line items and discuss anything you want about the budget. Then I have here representing the Loomis Company, which is the association's insurance brokers. I have Hector Molina. Hector is the vice president and senior account executive. And I'm sorry, I also want to introduce Alexander J. Medina, who's an account executive as well with the Loomis Company. So there's a lot of questions and frustrations about the 2024 budget. The biggest item is the insurance line. Hopefully you all received, I think it came on Monday, Saturday to Monday, a side-by-side comparison over the years regarding our adopted budgets, as well as Hector is here to speak in depth about the biggest sore in our side this year, and that is the insurance line of our budget. So Hector, I'm going to give one other thing. We ask that you refrain from asking questions until he's had an opportunity to explain what's going on in the insurance industry, and then we'll open the floor to unit owners, and we'll start from the back forward. Okay? Oh yes, if we could silence our phones, please, as well. Oh, one other thing. When you have the floor to speak, because the amount of unit owners that are present, we want to make sure everybody can talk. I will actually put a timer on for 3 minutes, okay? And then if you're not finished, we'll return back to you as soon as everybody's had an opportunity to speak, okay? Yes, and if you can provide when you're speaking your face and unit number for the record, if there's any follow-up items or things that we have to get back. Okay? So Hector, you have the floor.
Good evening, everybody. My name is Hector Medina, the Vice President, Agent in Charge of the Loomis Company in Fort Lauderdale. The Loomis Company has been around since 1955. We're in the top 100 of all insurance agencies in the United States of America. At this branch, we've been here since 1982, so we are in this marketplace. We handle approximately 350 to 400 associations in Florida, so we know this business pretty well. So everybody here has been reading newspapers, seeing the internet, there's story after story about the insurance market here and what's happening. The reality is there's a bunch of factors that affect the insurance. The first factor, which is a major concern, is hurricanes. We had Hurricanes Wilma back in 2005, and then for 17 years or so we had nothing. The last 6-7 years we've had 6 major hurricanes. Just this year in August we had Idalia, but before that we had hurricanes which created 60 billion losses, 40 billion losses, 30 billion losses, and that's what it'd be. So the insurance companies, of course, can't absorb that. They can't handle it. So before there was a lot of room between hurricanes, a lot of time. And so what's happened is many of these insurance companies have gone insolvent. They've gone out of business.
Can you speak up for us in the back? I can't hear you.
A lot of these insurance companies have gone bankrupt, out of business, which of course creates a situation where companies that remain become more conservative and they want better terms. Now they add to the equation the fact that the buildings here have need of improvement. The roofs are not in good shape. The insurance companies today are looking for the quality of the roofs and the age of the buildings. And also there's recertification. So in the state of Florida, what's happened is the legislature has decided all at one time that you gotta do everything. You gotta fix the buildings, you gotta have reserves, you have to have good quality, all this stuff at one time. It's unfair in a way, but it is what they think is necessary to have done, to get things back in order. So the recertification is an issue. At this point in time, the association is gonna re-roof all the buildings, right? And that's gonna be very helpful because that will put you in a better position. You can get quality insurance. There are only 2 insurance companies today in the state of Florida, 2 writing admitted insurance at all. Heritage Insurance Company and American Coastal. Now think about that. Of all these insurance companies, only 2 are writing. What would you do if you were one of only 2 insurance companies writing? Well, as a practical matter, you take advantage, right? I mean, you got a monopoly. You have a monopoly, what you do is you make terms more difficult, you look for higher premiums, you look for higher deductibles. So essentially, this has driven this association, like many others, into a situation where you have to pay more. Previously, the association decided to keep the limits a little lower, but you needed a loan to re-roof, and that required that you have additional coverage to go all the way up to the top of a hurricane. That was driven by the need of the bank to have full collateral. So that's outside of the control of the association, right? Okay, you have a couple other things that's happening. The legislature here in Florida has made some changes. These changes may or may not help you. What they're really doing is they're thinking that if they help the insurance companies make more money, eventually they'll become more profitable and they'll begin writing more business. So almost everything they've done is to help the insurance companies to have a more healthy, balance sheet. For example, the amount of time that you have to put in a claim has been shortened from 3 years to 1 year, right? That doesn't help you. That means if you have a loss and don't know about it, and 2 years later you want to put in a claim, it's impossible. They've done a bunch of other things. They say you can't assign benefits, so that a lot of times you have contractors, they come and they tell the association, hey, I'll take care of this. Give me the rates to get the insurance, and they blow up the insurance. You have a lot of fraud here, right? A lot of dishonesty. Nefarious people coming here. This, the Florida market represents something like 70% of all the fraudulent claims, litigation, but only 67% of the premium. So you can see that's a very big negative. So you have weather events, catastrophes, you have a legislature that's helping insurance companies and now unit owners, really. It's what they've done. As best as they could, that's the solution. So you don't have much of a solution there. Now, as these buildings get re-roofed, one possible solution to reduce the premiums is to take the phases that have new roofs and carve them out and write those policies differently later. And that would be a way to go. Now that's contingent on the roofs being done, doing a mitigation inspection that proves that it was done, and then submitting to carriers. The thing about insurance, if you were to try to cancel your policies, there's a severe penalty. Minimum earns 80%, right? So you can't cancel the policies. What you gotta do is carve out the better buildings when it's sensible, you have enough, and do a different policy for them. You can reduce or remove buildings from a policy by contract without no problem whatsoever. So we have a solution predicated on the fact that you re-roof and that you get this process going, okay? So that's basically the entire situation. You want to do Q&A now?
Do you want to add anything?
No, so far Hector's covered the entire thing. It was very nice.
Can I make a suggestion about some of you, if you want to come up and stand over here so you can hear better? Let's move the chair. Move this chair out to the halfway. And if you want to sit down on the floor over here, watch There's some room here on the other side as well. Okay. At this time, we're going to open the floor to unit owners to ask Hector. I don't want to keep Hector for the entire meeting. So we're going to, as I explained in our meeting guidelines, we're going to start from the very back. We can start from the right to left. So we do that back row first, and we'll go all the way until we get to this group here. Does anybody in the back row would like to ask a question about the insurance?
Yes, sir.
Could you give us
Excuse me, name and
Butch Connor, 1728 71st Avenue? Give us a projection or a guesstimate. I think we're all here because of this tremendous amount of increase in our monthly.
Right.
So with the roof stone, can you give us a projected estimate of the decrease in monthly?
Well, I can tell you that historically, the average when you have a new roof, which is of course subject to market conditions, is about 15% to 20% as a credit. And remember, once you get the new roofs, the mitigation form will also help everybody in terms of their interior HO6 policy too. It will grant you a credit there. And in Florida, the mitigation credits are mandatory for personal homeowners as well. So there's a benefit there, so that your interior insurance, whatever that is, and we've been hearing from people how astronomical even that insurance is going. That'll be a saving for you that way too. But that's about it.
So I understand you correctly,
Yeah.
about 20%?
Yeah, 15 to 20%. Yeah, on the average. Next.
Is there anybody else in the back row that would like to speak? Yes, sir.
Yes, sir.
Solomon, 1709 Northwest 74th.
Yeah.
Okay, you said 15% credit, right?
On the average.
Yeah, but I'm saying we were paying less than $500,000 before, and because of the lack of roof, we tripled.
Because-
So how we just do 15% on with the new roof?
Because there's a bunch of other factors too. It's not just this is not mandatory. Insurance companies on the commercial side don't have to do anything. They don't have to give you any credit. It's not mandatory. On personal lines, yes, but not on commercial. So if the hurricane situation or losing money or reinsurance or losses in London affect the insurance, they won't give you a more aggressive credit. The buildings, at one point, American Coastal was writing the insurance, which is one of these two companies I was talking about. They got off the risk. They canceled the policy. So you are now not doing business with an admitted carrier. There are only two. That's it. Everybody else is charging a lot more. You follow me?
So we're gonna be like around 900,000?
It depends. You got other stuff. You have G liability, you got the resident officers, you have crime. We cannot tell you with any finality what it's gonna be. It's gonna be subject, I can tell you, you'll be in way better shape once you get the roofs done to get the credit and to get your premium down. But what that number's gonna look like exactly, we don't know. It's gonna be, you gotta remember, there was 6, 7 hurricanes in the last 5, 6 years. I mean, 60 billion, 30 billion, 40 billion. Imagine losing 40 billion in 1 year, 40 billion. I can't even imagine what a billion looks like, right? And you? I mean, so the insurance companies are taking a shellacking. And that means you got to wait for them to do their thing. So that's the unknown. It's not cast in stone. But on the average, it's that amount. Okay? I hate to sound vague, but nobody can do it until the time comes. Supply and demand. Next.
Thank you, Hector. Is there anybody back here? Back in the back here? Yes, ma'am.
Hi,
Yeah.
Cheryl Fox,
Yes.
1720 Northwest.
Yes.
72nd Avenue. I would like to ask, I see that the insurance on average for phase 2 is almost $11,000 per unit for the year, which is what the estimation is over twice what we could sell our units for. Why is it assessed for so much higher than even our tax rate or what we could even.
Well, the things are not connected. You know, what you do for a sale, you could take a house that's a total decrepit house, and you put it at a location that's really valuable, and you can sell that for $1 million. You take a mansion and put it next to a garbage dump, and you can't get any sales for it. So like, there is no real connection in a way, respectfully to what you're saying, in terms of economic, you know, what the sale is for, and what this is for, and so on. I can't tell you there's a connection. You follow?
Okay, it's more than
Yeah.
double what even what Broward County's tax people are saying.
Okay, you're asking about a tax question there.
No, tax and the insurances, so what we could sell it on, even if you got more because that's just the assessed rate. You're asking for more money, over twice what even that rate is by the Broward County.
I don't know what the rate is. What would you sell your unit for, let's say?
Now, I'd be lucky to get 250, you're.
250,000.
But you're saying, according to this insurance, excuse me, let me finish.
Yeah.
The insurance is saying it's over $350,000. Your insurance is asking for. Why is it being assessed for so much
I don't know the
less?
connection. You're saying that how much do you pay premium for your unit? How much? Do you insure the unit?
The inside?
Yeah.
The inside has nothing to do with the outside.
What,
I'm
you
asking
do-
for the outside.
The outside is whatever the premium is, I
Yes,
tell you.
and what I'm saying is, the
Yeah.
outside
Yeah.
is what's being assessed for over double what we could get.
I can't control what you can get for the unit, and I can't control the taxes. All I can control is what the insurance costs, and it doesn't have to correlate to what you're saying. If it's an injustice, then it's an injustice that you have to accept. In other words, I'm not sure what your connection is and how you connect anything. I do insurance. Insurance is what it is. You're suggesting there's a connection to the tax base and so on and so forth. That's really outside.
You're insuring it for more money than I can even get for it.
You could get
I don't understand why
$250,000 for it.
each unit is being assessed.
I don't understand what you're saying. You could get $250,000 for the unit, right?
You're assessing it for double what I could even get for it.
I'm not assessing it, no. I think we're on the wrong page here, yeah.
I have a question. Elena
Yeah,
Salazar,
sorry.
1705 or 172 Avenue, phase 2.
Yeah.
If we decided, as a community,
Right.
to have higher deductibles,
Yes.
we decrease the amount of the money.
Yes. In fact, you have a high deductible already. The only problem with that is if you go too high, it's very difficult for Fannie Mae and Freddie Mac to allow a loan. And now, Fannie Mae will go to 10% now. They made a change because of the way things are here. But before it used to be 5. So if you go to 15, you would have a hard time getting a loan. That's the challenge. Yeah. Yes.
Carrie Zimmerman?
Yes.
Mary Flower, 1745 Northwest 21st Avenue. Going back to her question,
Yeah.
this is not a luxury place. I'm even ashamed to bring people here, the way it is. How much are you charging? I know it's for community, but how much the insurance is per unit?
I don't know, that's a question you would have to ask her.
It's your insurance and you don't know?
No, the thing with unit is not something I'm doing insurance for the association.
Okay.
And the way they charge it back to the per unit is something that the accountant take a dive into.
Okay. I watch the news a lot,
Yeah.
and I know the insurance went up based on hurricane.
Yeah.
But our insurance is not supposed to go up more than 10%.
It's really a matter of the condition of the buildings, and not in good shape. The recertification hasn't been completed, the roof's in bad shape. That's driving it too. And that is something you're trying to fix. In other words, as soon as you get that fixed, get these roofs done, get everything back in order, you can drive to a better condition. But you gotta get going in there.
I understand
Yeah.
what you're saying,
Yeah.
but I've been here for 19 years.
Yeah.
Those roofs were never done.
Exactly.
So this is because of poor management.
Yeah.
We have to pay high insurance.
I'm not gonna speculate on that, because, you know.
Because that's not right for us.
Exactly.
That's not an insurance question, that's
Okay,
a.
please, once I discuss, please don't overtalk each other. Miriam, you have a minute, 25 seconds left. Would you like to continue?
No, what's it?
Okay. Let's go right over here. After I'll go ahead and choose.
Okay.
David, 1725, Northwest 74th.
Is it possible for us to just get our own homeowner's insurance rather than insuring the whole building?
Well, you have to, well, the only insurance you can purchase is for the entire unit. Well, because the association is a different entity.
Well, the reason why I asked,
Yeah.
my mom lives right down the street, Jack Randall.
Yeah,
She gets, it's a townhouse community as well.
yeah.
And she just pays for her own,
You can
like
do-
her whole homeowner's insurance, and it's
I got that.
$4,000.
So you can, so essentially with insurance, it's all depending on the legal entity, whether an HOA or condominium.
Well, she's an HOA as well.
Right, so when you're an HOA, you can be fee simple and you get your own. You're gonna have, it's not about construction, it's about the Florida statute, the 720, which basically says you can do whatever you want with an HOA. So you can do fee simple, house by house. To change this, you would have to change the entity to an HOA and change, and you would have to have a vote of everybody and all that. And
Well,
it's
with
not-
favor of that.
Well, it'd be a legal question, it's not something you would have to change it. Okay, next.
All right, gentleman in the back, somebody raise their hand.
Yes,
I would like to know what the insurance covers.
okay. So,
I'm sorry, name and
My
address,
first name is Jill, my last name is Littag Houston.
and what unit and what address?
Unit 82, 1756, Northwest 72nd Avenue.
Thank you.
so the insurance for the association, unlike, other places in the United States like Buffalo, New York, Chicago, Philadelphia, in those places you have State Farm, Allstate, and they write combined policies. In Florida, you can get a policy, you get like 10 policies. And so one of the policies is property. Property insurance covers the buildings for everything that can happen to it: fire, hurricane, airplane hits it, truck hits your building. Anything that could happen, which is not excluded, is covered. Water damage. So almost everything's covered, including hurricane. And that's the structure. The building itself, the piping in the walls, the electrical, all that kind of stuff, the whole structure is covered by that policy. Liability insurance for the association, in case somebody slips and falls, breaks their head, drowns in a pool, any number of things. Somebody accuses the association of discrimination, that's covered. You have directors and officers. The directors and officers here will not serve unless they're protected about doing their business. They're not compensated. So if somebody accuses them of making a mistake, there's a policy for that. And the mistakes could be varied. It could be, I colored the buildings the wrong color. I didn't let you live here. The credit score is too low. There's so many things that somebody can be accused of. And so the board should not suffer, financial hardship by being volunteers, not making any money. It would be foolish to serve. So you have a D&O policy. You have a crime policy. If somebody steals from the association, it could be the accountant, it could be the board, it could be the management company. There's a policy to cover, protect the association against stealing. If you've been paying attention, you saw down in Kendall, they had the mechanics. Those people stole millions of dollars. I was involved in an association where the manager stole 1.5 million. When that happens, we arrest the person, those cops out there do their duty, and we throw them in jail, and then we get the money back from the policy. You have that policy. You have an umbrella policy above that protects the association against major losses, right? You have that. So you have all these different policies. All those policies make up this premium, which they're going to talk about. Okay. Yes? It's okay?
Yeah, just anybody in the back? Okay, let's move on to the side. Go ahead, Neil.
Marjorie Thomas, Phase 2, 1704, 73rd Avenue. This is for the board. Have you had any options of looking at other insurance companies other than this? And have we also discussed possibly raising deductibles for what we currently have, just so that we could do the repairs until we are in a better position?
Yeah, I think you may have missed Hector. I think Hector covered this already. I don't know if you just arrived.
No, I have not.
Okay, so Hector covered it. You want to answer the question?
Yeah, the deductible issue is you already have a 10% wind deductible. Typically it's 5. The reason for the 10 is to keep the premium down. And if you go higher, you're going to have a hard time getting a loan with somebody to purchase a unit. And in the end of the day, people have to purchase. If you don't purchase, the economic value will go down, right? So that's the issue. As far as markets, we've been to every market. All the agents have the same markets. The major companies don't do business here. State Farm, Allstate, Nationwide, none of them write insurance here for associations. And we've been to all the companies, and the companies that you have are the companies that agree to write the business. And other companies are more expensive, believe it or not. So we thoroughly went into the market and put together all these companies to get to $21 million that you have here in insurance. And that is what the loan requires, so you can fix the place too. They want to have full coverage. Yeah.
But how long is the process as far as when the completion of the work, so that
So
we can get the credit?
Okay, that's a good question. So the answer is they're working on it now. By November or December, they're gonna start doing the reconstruction of the roofs and so on. The association is taking on a sizable loan to fix the place. In other words, it's really a matter of fixing it, and it's gonna take time. How long it takes, it's up to them. There's a project manager, they have it all set out, and as quickly as they can, they're gonna fix the place. So theoretically, by next year, May and June, theoretically, you should be set to reduce this premium and get everything back to order.
So from the time it's completed
Yes,
to the time the process starts for us to get a credit?
I said that there's another way to go. You take one phase and you fix it, and then we take it out of the current policies, you write a separate policy. Theoretically, that's a way to do it, to reduce the premium.
Section by section?
Section by section, which they're gonna talk about. So that's the only way to reduce premium in a more immediate way. Otherwise, you gotta wait till May or June of next year to do it. So it depends on the time, how quickly it gets done, how quickly they do the work. That's what it takes. And remember, this is Florida. Everything takes longer. Getting a permit takes longer. Everything takes longer. Getting the materials. Heaven forbid there's a hurricane, and you won't even find a contractor, right? So it's very difficult. Yeah. Good. Yeah.
All right, thank you. Sir, did you have a question?
Yes, Robert Page, 721 Northwest, 74,000.
Yeah.
On her point,
Yeah.
once a section has been completed,
Right.
can the discount be applied at that time, or you have to wait for an entire year?
So the existing companies never ever give you credit for midterm. The existing companies, because they've been in during the hurricane, right? They've been insuring these buildings in this condition right now. So it's gonna be an adverse selection to them if they reduce the premium, because now you say to them, I got a better roof, right? So they're not gonna do it. The only way to get a reduction is to delete a section from the policies now and write a separate policy going forward. That's the only way to do it. And then that next policy will be lot lower premium. So that's the way to do it. Otherwise, you won't get a credit. There's no such thing. These insurance ones don't give a credit midterm for you improving the place. You're like locked in to the rate. It won't change, right? And it's because of the hurricane season. Hurricanes run from June through November, right? So imagine, if you will, if people can come in and go and, disregard the hurricanes, and the companies won't have any money. So it's all mathematical. They write the policy for 1 year. They expect that rate to pay them for 1 year, period. So there's no expectation you're gonna get a reduction for doing it in the current policy. One thing we can do is delete buildings, phases. You gotta have enough ammunition to do it, and then get another policy that's well within with American Coastal or Heritage, many companies. That's the way to go, if we can do it.
The question is, can that be done in the middle of like a year?
You could only,
If our units get done,
yeah, the point,
like in June or something, can we do that, or we have to wait till the
no,
next
you
budget
could,
meeting in November?
listen, so even before the renewal comes up next year, you can do it. All you have to do is get a phase done, all the roofs done, we qualify with a mitigation inspection, and then we delete those buildings from the policy. You can do that anytime, but it's all predicated on you getting the work done, close the permits and all this other stuff. So there's no guarantee. And if you get it all done by May or June, we want to go May, at that time you can do the whole enchilada and try to reduce the premium, because you'll be a better risk for anybody. The roofs are the main thing. These companies have figured out that by way of engineering, that if the roof is compromised, they're gonna have a significant effect. And they're driven into that model, and it's engineering, so you gotta get the roofs done. Period. Yeah.
This is the point of clarification. This estimate is based on the current condition of all the units, roofs, and.
Yeah. Yeah.
Thank you, sir. Let's travel up right here. Anybody have any questions for Hector regarding insurance? Yes, ma'am.
Kaylani Brown, phase 3, 1709. I just had a comment on it. It's like, this isn't a shock to me. I don't know why it's a shock to everybody else. I mean, all of the insurances have been closed out and now we're getting railroaded.
Yeah, no, it's a
But
terrible-
also inflation
it's a
touches
terrible-
everybody, even if
Absolutely right, it's a terrible
on
situation.
water.
It's a terrible situation, terrible. And I think it's completely unfair. But we handle 354 mistakes. This conversation we're having is universally across the board.
Yes.
It's like, that's what it is. So you gotta face it.
I bought my unit
Yeah.
six years ago,
Yes.
and I was gonna buy a unit across university over here.
Yeah.
They were having their 4th-year assessment.
Yeah.
They wanted you to pay $40,000 up front. So
Yes.
they were selling the house for $99,000 because they
Wow.
couldn't sell the house.
Right.
So we'll run into the same issue here.
I understand everybody's frustration, I get it. My own insurance went up, and I'm an agent. I looked at me, you're a pretty stupid agent, you're premium, you know?
My insurance, closed my insurance, they canceled it because of my roof.
Yeah, so that's a bad situation.
Yeah.
You wanna go to the next one?
Is there anything else on you still have time?
Thank you for that comment.
Okay,
Appreciate it.
anybody else? Yes, ma'am.
I'd like to, going back to the carving.
Yes.
That was my concern. Is that something that we have to, we're in for permit right now.
Yeah,
Let's say we get lucky enough to get it over a couple of weeks, it
Yeah.
would take more than a month or so
Yeah.
to do a roof. At that point, and we get everything squared away,
Right.
we have to go to the board to say, okay, now we want you to go out and rebid and get the new policy for that one section each time? Or is that
No.
something you're gonna do?
I've been asked to tell you an approach that may work, but the board has to approve it, and it's got all these conditions. So I'm not gonna comment on that, it's not my decision
Okay,
to.
so we need to go to the board for that.
The board will be on top of that.
Okay.
We're gonna be on top of the whole restoration project with a fine tooth comb, so don't worry about that. We will do whatever we can, whenever we can. Yeah.
It's not decided here. This is a potential approach that the board has asked me to introduce into the subject, but there's a lot of things that go wrong, like the permit thing and this and that and the other. So you got to let them kind of figure it out, and then we'll see what we can do. But yes, that's an approach that can be taken, but the board has to decide to do it.
No.
Well, I had posed that question to Hector a few weeks ago because since our insurance, they insure per building, right? And I posed a question to him, and I said, Hector, what's your strategy once these buildings?
Right.
Now, my question to you related to that is, you keep saying carve out clusters. Do they have to be in the same phase? Because we're gonna have each phase simultaneously.
I don't think it has to be, but I think it's smart to do it that way, because that is easier for the insurance company to understand.
Yeah.
In other words, you have a phase 3, phase 2, phase 1. And if you go all the way across, I don't think that's as clean in respect to the insurance company. I haven't thought about it completely, but I'm not, you can go the way you want. Why would you not want to do one phase at a time?
Because that means unit owners will be waiting more than a year for their unit to be
40-year certification.
done. And we need for the
40-year
40 year.
certification needs to have activity on all
And
forms.
we're getting off track because we're not, this is about the budget, but related to the insurances, the work is being done, each phase will have a work crew. And then, we still have to. So it's not a phase that's gonna be finished, maybe perhaps some phases will be finished quicker, but as the work begins, there's a crew in each to finish a building, then go to the next building, the phase. So you'll have buildings completed, but not clustered in the same
I think
phase.
it's workable. The only thing is, I would suggest that you have enough buildings done before you try to get the insurance for those buildings.
Yeah.
Because it's still under the name of the association, it's just be different policy. Yeah.
Right, because the buildings
I get what you're
the
saying.
insurance is
written by the building.
Yes.
So
Yes.
why can't they do the same thing, once the building is completed, why can't they insure that
No, I
building?
think that's not a problem.
Okay, that's-
But one is you still have to name insurance, the entity. And
No.
yeah, and you could certainly have it all over the place and so on. It just raises the question as to why it is the insurance company.
Okay,
Yeah.
we'll have to work on that, because that should be the strategy, not when we
Yeah, it
waiting
makes a lot of sense to me.
for all 4 phases to finish, when you have some
You
phases
think,
that are
how
gonna
long do
go
you think
fast.
this is gonna take? To get it all done?
You know, it all depends, depends when they start, we're planning, we're gonna have a workshop, discuss
So
some
maybe,
staging.
so you look at the buildings, you got 27, 28 buildings, if you get 10 done, at that point, maybe you do the policy. You try to get-
Carve them out
Yeah,
of the
yeah.
existing.
Yeah, I don't think the entrance is less relevant.
Okay, any other questions? Well, we'll have to let Victor, you've already spoken now, we'll have to let Victor go. Go ahead.
Okay, my name is Victor Posada, page 4, 1741, 71st Avenue. My question is, did we receive any other offer other than the one from Exxon to compare the prices?
Yes. Remember, Hector is a broker, he works with many carriers. So I'm not sure if you heard, that there are only 2 carriers that are writing for associations.
We went to 20 different companies, so in order to fulfill the bid situation, it says you have to get 3 quotes. We get 20 quotes. And so, but these are the best quotes. In other words, what you have is the best, most competitive quote there was. And a lot of companies just said, we don't want it. We decline. Because you gotta remember, they're looking at the recertification, they're looking at the roofs. And we're not gonna lie about everything, we gotta be honest, right? You don't wanna do a policy and then have a loss that happens, and then they say, wow, you didn't tell me the truth. So we're very honest, yes, sir.
And this one was selected because of the coverage or because of the price?
Both, yes. You had initially 7.5 million, and the bank that's doing the loan said it needs to be the full coverage. So they try to keep the limit down to a reasonable limit and take the risk to keep the premium down, but the banks wouldn't let them because they said, we are gonna leave you alone, we want the full coverage. It was out of the control of the board. You gotta get the loan, right? Else you won't get this place fixed. To get the loan, they had to increase the limit. You see, the bank decided, you gotta deal with reality, collateral, right? So that's what happened there, but the coverage is full coverage. Wind, fire, heaven forbid you have a big loss, that's a fire or something, and they don't have proper insurance. Insurance has to be proper. No matter what happens with the price, the insurance has to be proper. We won't sell something that doesn't have proper coverage. You know why? Because then we're gonna get sued. You'll get angry. Oh, you let me do this. I hear that all the time. You let me buy it. Did I take your finger in the blender? No. But that's what happens. So we sell both the coverage and the price. But this was the best price and this was the best coverage. But they tried to keep it low, the bank wouldn't let them. We couldn't get the loan without the increase. Yes, sir.
You saw the time, would you like to anything else, you're good?
A little bit of a
Yeah.
different question. As
Yeah.
far as the liability coverage,
Yeah.
if something walks out of my unit
Yeah.
and trips and falls, for
Yeah.
example,
Yeah.
does your insurance cover that?
Yes. Yes.
Okay, so I don't need to get liability for trip and fall anywhere on my property?
No, in fact, the policy, the general liability policy has every unit owner is additionally insured in the policy. In the event somebody says, you know, I don't like you, I fell in front of your door, I'm gonna sue you. The Association of General Liability Policy will defend you. It's intended to do that.
But
Okay?
if it's inside the unit,
No,
No, I'm
inside,
saying outside.
outside. Yeah, you're protected in case somebody, sometimes you have, let's face it, you have people in associations who are not real friendly. You have people malicious and who, you know, and they want to take advantage of you, they want to attack you, and they concoct a lawsuit. You need to be protected against that if it's you personally in a common area. So you are protected.
Thank you, Hector.
Yeah.
Anybody over here?
I have a question. When does the policy renew, the property insurance?
What was that?
When does it renew? Or
It was
when?
in May,
June.
No, for this next,
next year.
so why are we collecting this money, 1.4 million now for next year?
Because you pay as you go. In other words, the premium is finance, right? So you pay 1 month down, then 1 month and 1 month. So I presume, I don't know all the details of what they're going to do today, but the insurance portion is done monthly. And you have a loan.
So I know we have a policy in effect. We have
You have a
coverage.
bunch of policies.
Yeah, I'm talking property insurance. I
Yeah.
said that in the first statement.
Yes.
So it renews
June,
in June.
right.
So we're, okay, all right.
What happens is you pay, so when you set the budget, and she's the best in the business here, you set the budget a certain way, and then it resets comes January, right? And like that, and so it's beyond my capacity to understand. So she's got it. But anyway, what else?
Okay, anybody else? Yes, ma'am.
I'm Joe Horowitz, 1757
Yeah.
Northwest 71st, speaking on behalf of my daughter.
Yeah.
You mentioned, usually this board's been great if there's bids or something, we get to choose which of the three,
Yeah.
et cetera.
Yeah.
Now, automatically, what her point was, is that the unit's 250,000 as an average value, then we're paying 11,000 per unit. Let's say we all had a home somewhere, was that with a cost?
What's 11,000 per unit you're paying for the insurance, you mean?
I'm saying, yeah, it's just saying it averages that. So my question though is, can we, so now all of a sudden, if any of us want to sell, we're selling a unit with a huge premium for insurance.
Yeah.
Isn't, so you're mentioning Sallie Mae and Fannie Mae and
Right.
what if we choose as a condo association to
Right.
vote for a higher deductible? Are we given that option to see?
You can go 50%.
It's $1.4 million, so is there like, let's say it gets down to $1 million if we take a higher deductible?
You
Do
could
I
always-
take 400,000, give it back?
So the way it works in insurance, the Florida statute says you have to make your best effort to buy proper insurance for the association, right? That's what the board has to do. So whether or not 15% deductible, 20% deductible is reasonable, you know, is something that they have to figure out. It will affect you getting a loan for a unit, because you won't be able to
I'm
get any.
saying, me personally, if I
Yes,
want to
you.
get a homeowner's
Yeah,
loan,
yeah.
but I don't think any of us are
Suppose you're
doing
trying to
that
sell
right
your
now.
unit, suppose you're trying to sell your unit, and the person says, I can't get a loan, you won't be able to sell.
We can't sell it anyway, because now it's over $1,000 extra.
That's a philosophical question, I'm not answering the question as to why.
But are we given the option for higher deductibles?
Yes.
That's what I was trying to
Right.
ask. We don't want to vote on that question.
You go 50% and 20%, but listen, the
It'll
board,
lower it substantially.
the board has to decide whether or not that's a prudent move. Because if you take a loss, and you already in bad shape to some degree, right, construction, this and that, if you have a big loss on the front end, and you're in your pocket for $400 or $500 in a loss, that may not be a good day. And so you're suggesting that the association be more aggressive about that. But that is a board decision to be made, really, because if it happens and you guys are like upside down, everybody else here is suffering, and you have buildings destroyed, and now you have to assess $5-6 million, what do you do then? So that's it. So this is one of those things that you
Playing
got.
the odds, playing the odds.
Yeah.
I'd rather
Yeah.
loss. I'd rather risk having a higher
You
loss.
may, but there may be a lot of
Well,
people
we
here.
need to vote on
don't.
that. We need to vote on that. Vote on what the deductibles.
Please.
Okay.
She has the floor still.
Okay, so,
Okay, so I would like to see all the options for, again, a loss deductible and, you know.
you can't get a loss limit approach because the bank won't let you. The bank wants you to insure for the full limit. For the loan that you paid out already, it's done. So you cannot go away from it, it's contractually obligated by the loan. So that's done. The only thing you can do, and in fact, the wind deductible may be an issue with the bank. The bank cannot let you go to a high deductible because they lend you money to protect.
But you're saying may not let you go. We'd like to
So
know.
that's a question that I ask the attorney on the loan. But I know banks, and I'm involved with an association that took out $22 million loan. And the bank said the insurance got to be for the full limit, which is 60-something million, and you cannot go higher than 5% wind deductible. Both. So depending on what they
Can't we
have.
see that as homeowners? Can't we get the paperwork?
That's not a question for me, that's a question for the attorney. And yeah, documents are, to my understanding, are transparent, but you have to do certain things to see.
I called 3 times to see the bids and everything, no one ever returned the call.
That's a long thing, it's not a big thing, but the thing is,
I'm an insurance.
and there's some things, but insurance paperwork is transparent, you know, there's policies in there, they can share with you, you can see it.
I asked
But-
3 times and everything, so.
Well, I think that you gotta deal
You
with
too,
the management.
everyone else try to see
The
it.
management company now has the policy, so if you want to go look at them, the law requires that they make it available to you, and then you have to pay a certain amount if you want to make a copy. All that's there, but he has the policies now. So whenever you want to show he's a professional, you can make that thing, but it's not to do with me, that part.
Okay, Hector,
Yeah,
sorry,
yeah.
run over a little bit.
Yeah.
Anybody that wants to speak for the first time, before we go back? Okay, any second questions from those that have spoken already? No? No more further questions regarding insurance?
I got something.
Yeah.
You had said that
Excuse
we already
me,
took
Dave.
out a loan, David 1725 Northwest 74. You said we took out a loan already?
You have a loan, yes, to,
I don't have a loan.
no, the association has taken a loan. You're part of the association, right?
Yeah, but that's something that was supposed to get voted on later, no?
No, there's some decisions that are made by the board, they have the authority. If you run a board and you run around and have to get everybody's yes, you won't get anything done, ever. The thing about democracy is messy, because you gotta get consensus. A dictatorship is easy, because you decide, well, definitely. But it's true, isn't it true?
How did we get into this conversation?
But in association, the board has the heavy duty. The board has the decision to make about some of these things. That's why there's a board, right? In other words, the board has to decide certain things. And there's certain legal things.
Tennis, is that when you going to that one? Is that the pool open? I don't know.
Yes, sir.
Robert Ford, 1724 Northwest 73rd.
I'm sorry.
Robert Ford, 1724 Northwest 73rd.
73rd.
Right, first. Now, we have a loan, correct, for the improvement.
Somebody sitting there.
Okay, so that-
Oh, somebody-
Somebody sitting here.
And that's already been established. If we change anything here, in terms of talking about we have to have so much down and all this other stuff, if we change anything here, is that gonna, we're still gonna have our line of credit?
Yes.
So we can start the roofing, right? Go ahead.
There's a process. The reports are in the city, you're gonna get permitting, you know, that's what I was saying earlier, that we are gonna start having base meetings. First thing we have to have with the contractor is a workshop. I'm getting a little bit off, what I'm saying is
You want to say that?
assessment.
Somebody want this.
I'm just
Assessment
concerned about the
meetings coming up.
insurance. This is why I'm
No,
doing
it
it.
has, one thing has to do the other. What we're gonna try to do is, in this agency, what if we can carve out cluster buildings as their job?
Here, take this back there.
If the insurance company wants to still makes you say, insurance company's not obligated to credit us, right?
Right.
But when we renew June second is our renewal. We're hoping that by June second, we have quite a few buildings done, and we're gonna have 4 crews, 1 each phase, doing buildings instead of waiting phase by phase. So,
But hurricane season's almost over. So why can't we wait until, and get doing, I guess we can't wait. I'm just trying to figure out what we can do cheaper insurance until that time.
yeah.
Hurricane season starts in May.
Yeah,
And we're almost done here. By the time this is done, we'll be done.
June.
Right, so we not really need hurricane insurance for a few months. And is there any way to
You
say
can't buy
about
insurance,
that?
and listen, the way it works, we talked about adverse selection. You can't buy an insurance policy, cover hurricane, and then drop it. Hurricane season.
No, I'm saying if you do it after, if you wait until just before,
But you have a policy that's gonna have to go through June, you already paid
well,
for
I
it.
thought we,
Yeah, the 80%, that's really high.
Yeah.
Think about it, a property insurance policy is having a very, very significant penalty if you try to move off it prematurely. It's like 80%, you stop, you're upside down, so you gotta let it ride. You still gotta concentrate on fixing the place, is the main thing. What else?
So, I think, sir, you still have some time. Do you have any other additional questions? Okay, great. Carol, why don't you speak to the loan and how that's tied into the insurance?
The lady has a question, I'm sorry.
Yes, we're gonna continue. He's not leaving yet, don't worry.
I'm being held hostage.
So there's a loan, the association had to take the loan out because you can't hire contractors, you can't get permitting, you can't do anything unless you move forward knowing how you're going to pay for the work. So the banks would not consider anything without the full coverage.
Right.
We tried. We had to go back, we had to do an additional amount because the bank required it. You had to bring it up to the $21 million value. $21 million divided by 128 homes is $164,000. I heard someone say their homes are worth 240 or something. 250. So that 21 million at 164,000, that's pretty close if you think about it. So the appraised value, the bank required it to be at the full appraised value. Banks don't just give money, they come to the property. They look at it. You were denied loans for many years We've been working on this for 10 years, for many years, because the values of your homes were not high enough, and you didn't have enough cash in the bank. That turned around, and we knew that was gonna turn around. It just took time, more time than we hoped, but that's the way it was. So that loan that you have, that's signed, sealed, and delivered. It's a line of credit that will go into a term loan.